Okay, welcome out to tonight's advisory report. It is June 2nd, 2026. As you can see, our gauges are all in the green, favorable market conditions in a intermediate bullish trend, in a short-term bullish trend, which means we are predominantly playing offense. You can go down here and see what our targets are for our different strategies. 90% plus for the ultra aggressive and the aggressive. The moderate aggressive, we're going about 80%. Moderate 64, moderate conservative 45, conservative 24%. Each one of these strategies has sort of a governor on them on how aggressive we will get when we're playing offense. So they are all right around the max. The ultra aggressive is a little less, but that's just because we took some profits on some things that we had today that just quite honestly have just been moving up fast, strong. So let's jump on over to the charts really quick. We'll start out with the intermediate trend. We play offense when the S&P 500 is above the 30-week moving average, which is this orange line right here. So our bias will be to play offense. And when we're below the 30-week, you can see the red areas. That's when we'll be playing defense. It's been a wonderful gauge for us over the course of time. And it looked like it's working again, right? There's some area right around here when the Iran strikes started. And we got a little defensive, the rebound from that, and the stock price action caused us to get back to offense. So let's go on over to the short-term chart really quick. This is the S&P 500 daily. Each one of these candlesticks is 1 day of action. And you can see right here we closed and looks like we moved slightly or edged into all-time highs. You can't get any more bullish than all-time highs. The 20-day exponential moving average is our short-term guardrail. And we've been above that and been above that nicely. So we continue to play offense. We did play a little defense right here and then got back to offensive a little bit lower. So that was a good play for the portfolios that participated in that action. One thing of concern, we are still extended above the 50-day moving average, 7.18%. Normal extension where you start thinking about, are we overheating, is 6%. But you know, that hasn't really caused us to make much of a change because price plays first. So we just look at the charts and play the price. Another indicator that we're using that you won't see on this screen is how close are we to the Bollinger Band second standard deviation away from the 20-day EMA. And we are not above that. So things are working out really well for this market ever since the 1st of April. Let's go ahead and drop down and look at bonds. We've had our eye on bonds as they are part of our portfolio. And you can see right here, we drew a downward sloping trend line. And this kind of a downward move has been contained. What we're looking for right now is to see if this area of price will move sideways and break through this downward slope and then turn back up. That would be a reason to get offensive on bonds and negative towards yields. Let's go ahead and look on over to Market Lens and check out some of the positions that we have in our ultra aggressive strategy. We've already talked about the S&P 500. Let's look at the tech sector ETF XLK that we bought right around this area and have held it for this whole move. So you can look at like 140 all the way up to coming close to 200. It's not a bad rate of return. I think that's 30-something% or so. So nice play on that one. Let's go ahead and look at, we also have the double S&P 500, and that one's moves basically double what the S&P 500 does. So we've had that one for quite a while. Lunar was an amazing play for us. We're now down to a smaller position on it, less than let's see, looks like less than a 2% position in our portfolio, moving very wildly, but has had a nice run up since we got into it. So let's look at Marvell. Today's big winner. Looks like Marvell was up 32.52% on the day, a gap up, and just continued to climb. We have a position in this inside of our ultra aggressive account, and it's done really nicely for us since we entered. We still have Micron, the darling of this run, and if you want to look at maybe since the 1st of April, moving from about $325 or so all the way up to $1,000. And that's been an amazing move, and it just kind of continues higher. So helped this portfolio out a lot. Dock in, we took a position in this yesterday, and you can see the move, and then maybe some additional confirmation as it's holding highs above these highs. This was the low, came down and tested, so it's just holding that line. So Twilio, also a position in this yesterday, and this one just rocketed higher. I remember yesterday, I think the stat was like 19% up, opened a little bit lower, and then closed at all-time closing highs below yesterday's high. So a very good action right there. And then Wolf, and you can see that was bought yesterday, and a nice move today to start out the day, but then kind of faded a little bit. We'll see if this needs a little bit more sideways action before it rips higher. Most of the strategies were in line with their benchmarks today, and the ultra aggressive did well above its benchmark, the S&P 500, by a lot. So that's what we got for you today. Take care. Have a wonderful afternoon, and we'll be back at it tomorrow.